What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday. It is Fundamentals Report Day. Every Monday, I put out a free weekly newsletter, the Bitcoin Fundamentals Report, and then I come on, talk through it, discuss it, look at all the different topics we have in the report. So that's what we're going to do today. Hope you guys had a good start to your week. The green candle makes everything better, I know. But all right, share this, and then I'm going to maximize this other screen. I hope it comes through okay for Telegram. All right, well now, freak, lost my tab. Hold on a second. Let's see if this is going to still work for them. Okay, still showing up. All right, bitcoinandmarkets.com. This is where you go for all of my content. You can support the show here as well. You can get member perks, member benefits, and all that stuff. So let's jump into the report. And I see that my setup here is a little bit wonky, so I'm going to change this. There, that's how I like it. Okay. Bitcoin Fundamentals Report number 279. Been going on for a lot of years. It keeps expanding. The newsletter keeps expanding, but I cover headlines for Bitcoin, headlines for macro price. I cover the mining industry and layer 2 when there's stuff to cover on layer 2. But you'll see as we go through this, there is, of course, a lot going on in Bitcoin. And through the years, through the 5 years that I've been doing this, it continues to get more and more broad what's going on. Like, I would have never thought about discussing the mining industry above and beyond just hash rate and difficulty. But now we have the public miners. We have a ton of news coming out of that part of the industry. So this newsletter is continuing to grow. Make sure you go over there, subscribe. It's a good one to subscribe other people, friends and family as well. There's no spam involved. It's just once a week. It's kind of a longer read, but you can get a good grasp on what's happening in the Bitcoin space. I don't put a ton of my flavor into it, really. My contrarian macro flavor. It's mainly Bitcoin news. And so it's something good to share. So I appreciate everyone that supports, everyone that shares this content out, and all that. Also, guys, on Rumble and YouTube, I will be checking the comments later on and trying to answer any questions or read any of your comments. So, all right, let's get into it. Snapshot of Bitcoin always up front. We had consolidation, but as I started writing this morning, of course, price takes off. We will cover the price chart. We'll cover all of that here down below. Media sentiment is neutral. There's some FUD coming out of the ECB, but for every FUD article that comes out, a billionaire comes out and says something good about Bitcoin. So, give or take, it all comes out neutral right now for me. Network traffic is moderate. We'll cover all of those stats. Mining industry is still a little bit in consolidation, but it's kind of coming out of that, especially with this big spike in price. That's going to help all of their bottom lines. Days until halving. I don't understand why this is controversial, but there's several different places you can get this countdown. And I was looking at like maybe a handful of them today, and none of them were the same. There's some that said like 55, some said 52, some said 54. The one I've been looking at for a long time is 50. So that's what I'm going with, 50 days until the halving. For people new to Bitcoin, the halving comes around every 210,000 blocks. And since every block is roughly 10 minutes, we can estimate when the next halving is going to be. Of course, if there's a lot of growth in the mining industry and blocks are not 10 minutes, they're actually 9.5 minutes on average over this entire halving epic, then it will be sooner, right? It will be like a month sooner or something. But we can estimate roughly the time when the halving is going to be. Okay, weekly price. At the time of writing, it was 54,668. That's 2,800 above where it was on the last Monday's issue, or 5.4%. Market cap was 1.072 trillion. And I'm already used to this because we have this statistic in trillions for now, a year or two. Just because we need to get ready to talk about Bitcoin in trillions, and being back above $1 trillion in the market cap is very awesome. Okay, Satoshis per dollar, 1831. That seems low. I mean, we're all used to, being in the 20s, 2,500 Satoshis per dollar or something like that. But now we're under 2,000, and that feels a little bit weird. One Finny, that's my denomination of Bitcoin, is 1/10,000th of a Bitcoin, right in the middle of the decimal places. So in the code, there's 8 decimal places. This is 4, and it's just a denomination like you would call a grand, or something like that. Benjamin in dollars. That this is a Finny after Hal Finney. And so anyway, that's $5.46. Previous difficulty adjustment was about 10 days ago, 11 days ago, and it was plus 8%. That followed a plus 7%. So the difficulty has really shot up in the last month. Network, or the next estimated adjustment, though, is negative right now, negative 2.3% in 3 days. That's not a big deal. Like I said up here, mining industry is in consolidation still because it came so far in the last 6 weeks. Mempool, under 200 megabytes, 192 megabytes. Fees for the next block, $4.36 to get in the next block. That's 57 cents per virtual byte. And then the low priority fee, which is, I don't know exactly what they do for this. Maybe it's, within the next 6 blocks, you can take about $1 off of that down to $3.21. But these are very, very manageable fees. Of course, if you're trying to send $5, you don't want to spend $3 for a transaction fee. But if you're trying to send $500, $3 is not a very big transaction fee. And of course, as we go forward, more and more, the main chain, the main consensus layer is going to be used for larger movement of money and not for everyday transactions. Lightning Network, speaking of everyday transactions, Lightning Network lost another percent on the capacity and pretty much another percent on the number of channels. This continues to fall, and I'm very, very surprised by this. I thought it was going to catch on back, 2017, 2018, had just very big hopes for Lightning, but it has not panned out the way that we thought it all would. I'm hoping that this big run up in this cycle is going to show, or at least incentivize, another layer 2. I'm very bullish on sidechains. As people that listen to my content a lot, you guys will know, bullish on sidechains like Elements, not so much on drive chains. I'm not so much up on Fedimints and things like that, but there are a lot of different layer 2 options, and there will be a lot more even in the future. Sidechains are an Adam Back invention. They date back to about 2014. And so they are pretty much the oldest, and they have a little bit up, a little bit of a head start on Lightning. But I see a route to universal adoption through side chains. Now, if you're new, why most Bitcoiners don't like side chains so much is because they're federated and they're not decentralized. So Lightning Network is decentralized. You can open your own channels. It's all on, connected to being on chain. There's no outside consensus. You have a consensus within your channel that you have with somebody else that you can send thousands and thousands, millions of transactions a minute in a channel. I don't know what the limitation is. It's based on your node's capacity or the speed of your node. So that's decentralized. Sidechains are federated. And that turns off a lot of Bitcoiners. But for example, the Elements or Liquid sidechain, they have, I think it's 15 people. It might be more. They might have added some over the years, but it's 15 large institutions or corporations. There might even be some individuals, I'm not sure. And they all run a node, and they keep consensus amongst themselves for the sidechain. And I can see this very easily ported over to a nation state. So the nation state has their banking system, has their central bank or whatever, and they are running the consensus on the side chain. Now, I'm not saying that that is the best thing. Okay. The best thing in a perfect world would be a Bitcoin that could serve everybody. Maybe that's the best thing. I don't even know if I could say that, but that would be a optimal Bitcoiner solution, is if we could somehow use magic to create something that can be like Bitcoin, but scale for everyday use. We just can't. There's things called trade-offs. And so the trade-off here would be for using Bitcoin as a pegged underlying money of the system, and then having a federation on top. So anyway, back to Lightning Network. Yeah, Lightning continues to decline, and I don't know why. Even in the bull market, it's not really catching on. So, all right, moving on, we have, in case you missed it, some of the content over the last week or two from me. Bitcoin Magazine, I write for them, Bitcoin Magazine Pro. Let me bring that up here. Bitcoin Magazine Pro wrote this one last week, analyzing the correlation between MicroStrategy, MSTR stock, and Bitcoin. I had fun writing that. And then we have a couple dashboards, and let me show you this mining dashboard. We have a new format that we're doing. This is was doing about 250 words as a summary, but now we're going big on it. So executive summary, we have public miner update, where we look at the public miners in a table. And then we have mining activity trends. That includes things like hash rate, hash price, difficulty, revenue, volume transfer to exchanges, miners' wallet balance, etc. And I give some takeaways and stuff for that. Network traffic. This is something that I added to the dashboard just a little while ago. We have mempool, high priority fee, and the amount of inscriptions. So you can kind of get a quick glance at that type of stuff. And chart of the week. We just started this last week, so we'll see if I can continue doing some good charts. But this one here, what I did was I took the Valkyrie Bitcoin Miner ETF, Coinbase's stock price, and the Bitcoin, and set it back to the bottom, the FTX bottom. And since then, Bitcoin is up 200%, Coin is up 292%, that's the ETF miners is up 292%, and Coin is up 370%. So that's the kind of chart that you could expect from BM Pro. And then conclusions. So anyway, that's just a taste of that. Let's go back to my newsletter. Remember, this is the premium newsletter, Market Protons, I call them. And last week was Asian Currency Crisis 2.0 and Bitcoin halving forecast. This will be more podcasts. If I could get the podcast version of these live streams out more often, blog posts here. All right, headlines. So remember, I do headlines. Let me make sure I'm going out on Telegram. Yeah, it looks good. Okay, so I do headlines for Bitcoin, headlines for macro, and they can overlap. Some weeks there's less Bitcoin and more macro. Some weeks there's more Bitcoin, less macro. Anyway, so if you're reading the newsletter and you're like, hey, you only had like 2 stories for Bitcoin and 5 stories for macro, well, that's because a lot was happening in macro. And Bitcoin is part of the entire system now. It's a game. It's a player in the great game. And so we need to know what's going on in macro to know where Bitcoin fits in, how to position ourselves best for the future. So, okay, Bitcoin headlines. Hearing dogs howling outside. Anyways, we have a lot of wildlife in this neighborhood, so maybe they see like some turkeys or something they're howling at. Bitcoin spot ETF inflows increase amid net outflows for gold-backed funds, analyst says. So I've seen this out there now over the last week or two, that the gold ETFs have lost a ton. There's been a ton of outflows in the gold ETFs. It's dark here on the bottom. At the same time as Bitcoin ETFs have surged. So this was from The Block. And they say, according to ETC Group head of research, Andre somebody, there is an increasing divergence between global fund flows into Bitcoin and equivalent flows into gold. Quote, this might be an early sign of Bitcoin stealing gold's crown as the primary store of value. One thing, I mean, yes, it's important to say it's an early sign. There's still a long way to go. Gold's, the total market cap for gold is over 10 trillion. I don't know at this exact current price, would it be maybe about 13 or 14 trillion? So Bitcoin has a long way to go, but now we are counting Bitcoin's market cap in trillions. And with these ETFs going like this, I mean, it's only a matter of time. Of course, if for people new, what's going to happen is, since Bitcoin is fixed in supply and gold is not, that it's slowly but surely, eventually, it's going to take all of the store of value function away from gold, and gold is going to lose its monetary premium. It's just going to have industrial value. So for electronics, dentistry, things like that, and that's going to be much, much lower than it is today. But I would say 90% of gold's price is its monetary premium, and Bitcoin is just going to suck that right out. Bitcoin is going to go on to do things like real estate as well. So real estate is a lot of times held as a store of value, generational store value even, and Bitcoin is going to suck that right out as well. What else? That's it for that one. That was last week. This morning on the Bloomberg terminal, the ETF team published a post about gold versus Bitcoin product flows as well. So, of course, friend of Bitcoin, Eric Balchunas. Maybe I'm projecting onto him. I just want him to be a friend of Bitcoin. But Eric Balchunas wrote this with Andre Yap, and they say Bitcoin ETFs have taken in about $5 billion in new net assets since launching in early January. That contrasts with gold ETFs, $3.6 billion in outflows. So they're saying pretty much the same as this one up here. But, this is in the terminal. These are professionals reading this outlet, reading the terminal. So this is going to people that can make decisions and they can make connections. This story right here is going out to those professionals that can make use of this information, right? And it being on the Bloomberg terminal, I think, is extremely bullish for Bitcoin. Okay. ETF inflows finished last week strong. After a couple smaller days in flow volume on Tuesday and Wednesday, last week finished out with respectable $200 million plus days. I'll remind the reader that pre-launch inflow estimates were for approximately $10 billion worth of inflows in 2024, or that is an average of 40 million per trading day. I think there's 211 trading days a year in the US, at least 211 trading days. Or maybe that's how many that the Bitcoin ETFs will be trading for. Anyways, it's something around there. And what I did was I said, okay, well, how many trading days is it going to be trading for? And then if you average that out to get to that $10 billion mark, it comes up to $40 million per day of inflows to get to that $10 million mark. Well, we're already halfway to that 10 billion, and we are averaging $169 million per day, per trading day. And here is my spreadsheet that I'm keeping. You can see last week down here, last Tuesday, since Monday was a holiday, was 73 million inflow. And then Wednesday was negative 36 million. It's not coming in too clear on the video. But then we had 2 days, Thursday and Friday, that were 251 and 233. So that more than made up for those slow days at the beginning of the week. And flows continue to be very, very strong. Here is kind of the overview. The gray is Grayscale. Of course, they're below the zero line because they're net outflows, but blue is the new ETFs and what their inflows are. And then, of course, the orange line is the difference. That is the total. And you can see it's been pretty much positive since around 26th of January or so. We had one negative day last week, but positive the rest of the time. Very interesting. Okay, moving on to ECB tries to FUD Bitcoin. I was talking about this a little bit on the pregame show on Telegram. But all right, ETF approval for Bitcoin, the naked emperor's new clothes. They're scared. So the ECB has come out with a lot of stuff over the years. This is their newest blog post out about Bitcoin. Let's read a little bit of what they say here. For disciples, the formal ETF approval confirms that Bitcoin investments are safe, and the preceding rally is proof of an unstoppable triumph. We disagree with both claims and reiterate that the fair value of Bitcoin is still zero. For society, a renewed boom-bust cycle of Bitcoin is a dire perspective. And the collateral damage will be massive, including the environmental damage and the ultimate redistribution of wealth at the expense of the less sophisticated. Sorry, I had to add some flavor to that. So I don't think in proof terms. Okay, like they say, we Bitcoiners think that this is proof of an unstoppable triumph, but I don't think in proof terms. I approach monetary economics kind of in a scientific way, and nothing is ever 100% true. I mean, I guess you could say the price on Bitstamp right now is X. Okay, I think you can prove that. But in this case, like an unstoppable triumph, that can't be proven, and I don't think in those terms. But the way I do think is that it is evidence towards us being correct. And it is actual evidence contrary to their claims. So when they frame it as proof or not proof, they can put a negative spin on the evidence that's actually going against them and going towards our conclusions. So anyways, here's just a screenshot from this blog post. And their claims about a renewed boom-bust cycle is presumptuous. It never went anywhere. It has been working in the background the whole time. They want you to believe that Bitcoin was dead and then the ETF breathed life back into it. LOL. Nothing could be further from the truth. Bitcoin's persistence is what made the SEC give way. Bitcoin defeated the anti-Bitcoin interests, or the people with anti-Bitcoin interests. It was a victory based on incentives and self-interest. The ECB and globalists lost hard, and now they are coping. There will be no environmental damage from Bitcoin. Instead, it will usher in an era of low-cost, efficient energy usage and a greening of the planet. It will get rid of loopholes in the current monetary order that allow for overbuilding and corrupt programs to strip the environment. See China and EPA failures in the United States. So even the best laid intentions go astray. Look at all the overbuilding in China. Well, how is that enabled? That's enabled through credit. It's enabled through elasticity of money. And it's horrible for the planet. So if you get rid of super elastic money, you're not going to have these overbuilding problems. You're also going to have less surface area for corruption. And so Bitcoin is going to actually benefit the planet. Okay. It will redistribute wealth, at least initially. So going back to their thing, they said that it's proof. Then they say that there is going to be environmental damage. And now I'm talking about redistribution, trying to take down their claims here. It will redistribute wealth, at least initially. But one thing Marxists always lie about is that redistribution is an ongoing process. So they say it's a one-time thing. All we need to do is kill the bourgeoisie, and then we'll have equality. Of course, that's not how it works. Redistribution is an ongoing process. You have to have an ongoing Red Scare, or whatever they call it, an ongoing revolution to redistribute constantly. Maybe you can not redistribute for a few years, but then you're going to have some wealth build up in pockets, and then you're going to have to go and kill those people too. So that's what Marxists never tell you. They never tell you that it's an ongoing process. So Bitcoin will redistribute wealth initially, but it will not have this ongoing process. If you did it once, it would only take about 10 to 20 years for the most able amongst us to re-earn their fortunes. For lasting redistribution, you must have a boot on someone's neck and violate their property rights over and over again. Bitcoin has no ability to do that. What it can do is a one-time redistribution away from kleptocrats and those who can't earn it back. So remember I said it would take the able amongst us 10 to 20 years to remake their fortunes. But the kleptocrats can't do that. So it's going to redistribute money away from the kleptocrats, and they won't be able to earn it back. The Marxists are terrified of that. Okay, so that is the ECB and my response to them. Let's go on to the macro headlines. So guys, joining me, like, comment, subscribe. I'll answer comments at the end. This is my free newsletter that I put out every Monday. And actually, let me zoom in so you guys don't maybe have to squint so much. It covers Bitcoin headlines, macro headlines, Bitcoin price, Bitcoin mining industry, and layer 2 when there is some stuff for layer 2. Just got done with the Bitcoin headlines. Now we're going into macro. Like, comment, subscribe. Like, comment, subscribe. Okay. Chinese stock market, CSI 300, posts big bounce. I've been waiting for this bounce in Chinese stocks. And I think I wrote about this on a Proton going back. That's my premium newsletter. I think maybe a month ago. Roughly a month ago. Let's see on this chart where it would be. Yeah, I think it was like right in this bottom. And I was like, hey, this is a good time for a bottom in the Chinese stock market. It's going down long term. Okay. Don't get me wrong. This is not like it's over for the dip in China, but I think there's got to be a relief rally. They're coming in with hardcore interventions, and that, that's good for a quarter or half a year even of some positive price movement, a relief rally, but then it will eventually roll back over. So anyway, I have been talking about or waiting for this specific bounce for about a month, and we finally got one due to massive government intervention. We'll have to see if this lasts, but a relief rally might be in order. Bitcoin typically does well with Chinese stocks, so that's true. I mean, Bitcoin, everything is good for Bitcoin. It goes up when the stocks go down, but just putting that in to tie that into Bitcoin. All right, next macro headline: a fresh crypto crackdown is brewing in Nigeria. And I just copy and pasted this headline. Usually I cut out the word crypto and put Bitcoin only. Oh man, missed that one. Nigeria is a basket case. We've been talking a lot about Africa here on the show over the last couple weeks. And this is just another, we have two stories here just today on Africa and Bitcoin. But just juxtapose this with what's going on in the United States, okay? The love-hate relationship between Nigerian financial authorities and the country's Bitcoin exchange platforms is not going away anytime soon. Under a new move to control a currency crash, the government is reportedly scapegoating Bitcoin exchanges with plans to shut them out yet again. Quote, Binance, facing regulatory showdown in many countries and causing disruptions in the currency market, should not be allowed to dictate the value of the Naira, not on its Bitcoin exchange platform. Put the emphasis on the wrong syllable. Not on its Bitcoin exchange platform. Other crypto, oh my gosh, I'm trying to change this real time. Other Bitcoin platforms such as KuCoin and Bybit should be banned from operating in our cyberspace. FX platform Aboki should be rebanned. And this is from, I'm guessing, the head of their financial authority. I did see that I think it was the head of their central bank, died in a plane crash outside Las Vegas somewhere because he was going to the Super Bowl and died or it was a helicopter accident. So anyway, they're dropping like flies too. But here is the Naira. And just in the last couple weeks, it's lost another 2/3 of its value against the dollar. And they're blaming, of course, Bitcoin exchanges where people can go and change their Naira for Bitcoin or stable coins or whatever. And so they gotta stop it. Of course, it's happening because of their crazy policies. But next part now, peak cheap oil. If you guys have been listeners of my content, my deal is peak. What is it? Peak oil demand. So we've had peak oil demand, at least relative to supply, in my opinion. Maybe we're not quite there, but we're really close. There's going to be a gray area here where our technology is able to get oil out of the ground very cheaply, and so the supply is going to be higher. But the demand, we're going into recession here, and we're also at the end of a credit bubble, a global credit bubble, where, as far as I can see, you have low productivity of debt, you have low growth, and so there is not going to be a huge rise in demand for oil. However, the supply is going to continue to become cheaper and cheaper, especially in the U.S. with all the shale stuff. They're learning how to put sleeves into these shale wells, get double the output. They're learning how to horizontally drill over 100% further into the rock, and so they're I don't know if it doubles, but it's close to doubling the amount of oil they can get out of each well that way as well. So there is all sorts of technological innovation that's going on, and the demand is not really budging. Plus, we have a demographic cliff, and so if you go 20 years out, there's just going to be less people on the planet, especially in the developed countries where they have high demand for oil. So we have hit something like a peak oil demand. Okay. Now, I interviewed Luke Gromen going back 2 or 3 years now. No, actually, it's 2 years, because it was right as Russia had invaded Ukraine and right at the top in the oil price. I asked him, what if oil is peaking here? And he was pretty much like, no way. It's going to $250, $300 a barrel. Of course, it hasn't come true. And I've been back and forth with him over the years here on this. But he's poking some fun at me, I think, right here. Oh, I just clicked on it. Sorry. So he's poking some fun at me. He's like, RIP, peak oil demand. And this was this morning. And you're seeing all these like either stocks. I mean, that's not really an argument. But so I just wrote this up. I had a run-in with Luke Gromen this morning. He is the proprietor of the peak cheap oil theory. So his theory is that all the cheap oil is gone, and it's just going to cost more and more to get it out of the ground. Unlike what empirical reality is that oil gets cheaper and cheaper to get out of the ground. So in my opinion, that his theory is riddled with linear extrapolation and doomerism. He's also made fun of my objectively more correct peak oil demand theory. All right. So I responded to that with this chart. And let me bring this up. So OPEC estimates, or OPEC themselves, they estimate that they have 4.3 million barrels per day of spare capacity at the end of 2023. And by the end of 2024, I think their estimates are 4.5 million barrels per day of spare capacity. A second estimate from the International Energy Agency, I think that's what the IEA stands for, was 5.1 million barrels per day of excess capacity right now from OPEC alone. All that spare capacity, plus there is a war in the Middle East. So let me start that over. All that spare capacity, in other words, they've restricted supply, all that restriction in supply, plus a war in the Middle East, plus chaos in the Red Sea. Yet, oil is only at 70 barrels in oil, $70 per barrel. And I say, RIP, peak cheap oil. Luke comes back. He says, Saudi Aramco CEO says 100 million global oil production declining at approximately 7% annual rate. This is ridiculous. Oil production declining at 7% annual rate. Maybe that means like of the existing wells, they average a decline of 7% for an existing well from year to year. It's of course bigger in shale, but maybe that's what he means here. Diamondback says their baseline rate of 816,000 barrels per day of Permian production is 31%. Okay, that's what he's saying. So yes, shale declines rapidly. That's true, but there's a lot of it. There's a lot of it. You just drill more. There's been kind of a less drilling recently for shale, but like I said, there's technologies out there that can double or quadruple the lifetime supply from that well. So yes, it does decline by 31%, but it never goes to zero, or at least it hasn't. Even the first shale that they were drilling back in 2013 and 14, they are still producing. It's just a fraction of what they were producing originally, like say 5-10%, but that goes off as far as we know. So the more wells you drill, the more, might get down to 5% only, but then you stack that up, you got all those old ones. And so your baseline is higher, plus you're doing more every year. So, but whatever. So he said the treadmill is speeding up. I responded, the chart doesn't show that though. Show me on the chart where that's true. I said, without effects, it's just stories. The Aramco CEO is taking you for a ride to talk up the oil price. They've cut production by 5 million barrels per day. And now the CEO of Aramco is coming out and saying, oh yeah, giving you some scary story that all this global production is going to dry up because they want the price of oil higher. Like their goal price is $80, $90 a barrel oil. That has been that way for decades. That's what the Saudis want. So if we're stuck at 70, the CEO of Aramco is going to come out and say, hey, there's actually going to be a supply shortage coming really soon. And people believe him. But anyway, so, and the market knows that is garbage as well. Luke responds, yes, market is also very aware. If you take oil much below $60, U.S. shale has been approximately 80 to 90% of the global production growth for the last 10 years, will begin to go offline and won't return to prior peak for plus 3 years. See this time period. Ceding the market to Saudi and Russia in the meantime. All right. So if Saudi apparently goes out there and just opens the floodgates, price will crash. Peak cheap oil, where does that fit in? Prices will crash and U.S. shale won't have break even. Okay. But, the price of oil has been below $60 in the past few years. And U.S. shale, yes, after COVID had a big dip, but everybody had a big dip. And now it's back to all-time highs. So, yeah, maybe 2-3 years, depending. As long as you don't have a big crisis like COVID. If you just have oil prices gently falling to $50 a barrel, that's not going to affect the U.S. shale producers all that much. I mean, they have locked in futures contracts. They have long dated futures contracts where they can sell their oil that's coming out of the ground today, in the future. And so, no, I don't think it affects it all that much. Plus, I looked up the break evens. I remember seeing that. I mean, it's a range because each shale patch has a different break even. And some of them, I think like North Dakota might be around $40 a barrel. I think the Permian is around 50 to 55. So yeah, that's true. It's under 60, but that can go down. That's going down over time as that base level effect picks up. So um, yes and no on this. He says his base case is for oil to be range bound between 65 and 85 this year. All right. So I respond, are, are you saying that without OPEC intervention, oil would be much cheaper? How does that square with peak cheap oil? And how does this range bound square with peak cheap oil either? Um, you know well, there are restraints on both sides. Marginally higher prices incent more production and loses market share for OPEC. If they let prices fall, they can take out US shale. So your call for a range would be a good one if you didn't consider a recession and the end of a giant debt glut that is going to preclude much, if any, economic growth until it is handled, a decade or more. So that was my response. That's where it ends. Maybe he's starting to come off his peak cheap oil theory. Definitely sounds like that. I'll also add that Trump is +8 in nationwide polling and ahead in key swing states. He vowed on day one to drill, baby, drill. So that is also part of the expectation. All right, let's get into price. I'm running long, even though I was late getting started. I'm already running long. We're going to go a little bit faster through the rest of this. All right. The Proton that I put out, Market Protons, those are exclusively on price and Bitcoin. There's a Bitcoin forecast on each one of them. And then there's some other macro forecasting that I do there. So check that out for more in-depth. This is a very just cursory look at the price. So okay, Bitcoin, this is from last week. Bitcoin is above all volume by price resistance, horizontal structural resistance, and all moving averages. The path of least resistance has been cleared for all obstacles up to 57,000. That's what I wrote last week. We aren't quite there yet. You know, I was telling Telegram, we're almost touched 55,000 today. But we have broken out of this level near the ETF launch that had a psychological hold on price. The first chart below is showing the Mondays this year that have been big green days. I also highlighted the weekends. It's an indicator you guys can find on TradingView. Notice the weekends are almost always flat. The one real exception was February 11th and 12th. So let's take a look at this chart. These are the big Mondays here. Weekend stripes. Since the ETF launch, we're up about 15%, but it was within the ballpark. So the top of the ETF launch day was like 49,000. We were sitting like 51, 52. That's kind of the same ballpark, but I think today's price action really broke us out of this window that we've been in since the ETF launch. Now we are officially broken out after the ETF. That's what I'm saying here. Importantly, I also highlight when the ETF launched and that we're only up 15%. I think it's totally insane that we're only up 15% with 5 billion of inflows. The fact that Bitcoin was able to go sideways while its indicators cooled off is a very bullish sign. RSI is back above 70 after dipping into normal territory, so it completely reset basically. MACD is crossing back bullish. Indicators on the weekly are still bullish as well. Everything has room to rally significantly from here. I see little downside risk other than a crisis event or external market shock, like tail risk, a nuclear, somebody on the green button that accidentally hits it, or there's some market catastrophe that we can't foresee right now. That's the only thing I think that's going to send Bitcoin down here. Bitcoin is going higher at this point. Bitcoin is being sucked into strong hands of MicroStrategy and the ETFs. Shorters were liquidated, starving them of more capital to short again or sell outright. So we're going to take a look at that shorting chart here in just a second. But Here is this horizontal consolidation. I mean, that's a beautiful thing. No dips, really. I mean, yeah, we did kind of try to go down to 50,000 a couple times, but there was no real dips in this whole horizontal consolidation. But it gave plenty of time for RSI and other things to cool off before turning back positive now and going higher. So this was a just almost like a picture perfect sideways consolidation. All right, short liquidations. There has been some talk about a 53,000 liquidation level. Here is what that looked like. Quite a few shorts were liquidated between 52 and 53,000. So I found this from CoinGlass. They have a nice liquidation heat map. And you can see this is for a 1 week period. You see there's a lot of liquidations that were stacking up above the price. That means those were shorts. And as Bitcoin rockets through that, they're forced to buy Bitcoin. So that's kind of what happened there. Shot right through it, cleared out all of those liquidations there. Now, if you go back, zoom out a little bit more to the 1 month time frame, this is what we get. Notice the fuel we passed through back in the first week of February. So back here, first week of February, that was some rocket fuel that we went through and went up. All right. Short liquidations not only force them to buy to close their position, it also wrecks their ability to sell to protect their position, their other positions in the future. There is little reason to fight the price anymore. So once you break it, they're fighting to keep it from breaking. They're liquidating them. And then once it liquidates them, there's no reason to fight anymore, and price just goes higher. So that's kind of what happened there. All right, so that is the price section. Let's go on to mining headlines. Thank you guys for hanging out. Bitcoinandmarkets.com is where you guys can sign up for this free newsletter. I will be checking the comments at the end. Make sure to like, comment, and subscribe. Headlines. Mining headlines. U.S. Energy Data Agency is temporarily suspend Bitcoin miner survey after lawsuit. Huge news from the U.S. survey of Bitcoin miners. For the record, I don't necessarily like this effort by the U.S. government because it does increase the attack surface of what should be considered a monetary player, but I am not as black-pilled about it. I tend to believe government employees will just be orange-pilled by their research. Anyway, back to the articles. This is out of Reuters. I link to an archived copy in the bullet point. Most of the bullet points are linked, by the way. So here's a quote from the article. U.S. Department of Energy on Friday agreed to temporarily suspend its energy survey of energy use by Bitcoin miners following a lawsuit by Bitcoin miner Riot Platforms and an industry group. The DOE's statistical arm, the U.S. Energy Information Administration, will halt its mandatory survey for a month and sequester the data it had already received after it began collecting information from Bitcoin miners on February 5th. The agency said in a Friday notice to a Texas federal court. Riot Platforms and the Texas Blockchain Council had sued the Biden administration in that court on Thursday, seeking to block the survey, which they said could harm businesses by forcing them to divulge confidential and sensitive information. They said the emergency demand from the EIA was based on, quote, speculation and conjecture that Bitcoin mining is likely to present a threat to the power grid and failed to support proper public notice and comment requirements under federal paperwork reduction and administrative laws. They asked the court for a permanent injunction prohibiting the EIA from requesting the data without first complying with the law. Quote, this is a case about sloppy government process, contrived and self-inflicted urgency, and invasive government data collections, the plaintiffs said. So, very interesting. I think this is a big case. Wherever this goes, I will definitely be following this and keep you guys posted. The U.S. is litigious, and sometimes being litigious protects your rights. So this hopefully has a good outcome. And like I said, I will be reporting on it. Next, two headlines here: Ethiopia to become first African country to mine Bitcoin, and Bitcoin having bloodbath could push U.S. miners offshore to Ethiopia. Is the imposition here? Bitcoin mining in Ethiopia is starting to get a few headlines. It might not, or it might leave the U.S. on net, but the apples to apples comparison of electricity price is not the whole picture. So I didn't write that very well, but if you're talking, okay, this is 70 cents per kilowatt hour in Ethiopia or in the US, and it's 5 cents per kilowatt hour in Ethiopia, say. So 7 cents in the US, 5 cents in Ethiopia. It's not an apples to apples comparison by any stretch of the imagination. Yes, Bitcoin mining can happen far away from civilization, and as long as you have like a internet connection, it's fine. So you can have some security by being far out. But Ethiopia is a pretty darn dangerous place. Jaron, he's been pumping this with, let's see, what's his company's name? Where'd I put that? Did I write it up here? Oh, Hash Labs right here. So he's been one in my feed promoting the move from the US to Ethiopia, saying that. While I'm fine with it if that is the case, what they do not consider is security costs and tail risk in their calculations. Ethiopia just experienced a civil war from 2020 to 2022, and it's not completely done. It kind of is. I mean, it officially is, but it was like a treaty that was signed that half the people don't like. So it might not be done. They're also exposed to deep tribal and governmental tensions. It's just like Nigeria. Different groups of people are controlling the government at different times, and then the other tribes, that's about a third of the population, they want to rise up. So there's a lot of deep tribal and governmental tensions there, and a fundamental precariousness of legality and security in the country. Egypt and Ethiopia are still in stalled talks about Ethiopia's new Grand Ethiopian Renaissance Dam on the Blue Nile. So they have started filling this new reservoir for the dam, but the discussion was between, do they fill it fast or do they fill it slow? Does it take 20, 30 years to fill it, or do they do it in 3 or 4, right? Egypt obviously didn't want them to fill it in 3 or 4 because it would cut off a lot of their water supply in the Nile. 90% of their fresh water comes from the Nile. So they're trying to work things out with Ethiopia, and it's just not working. They're not getting satisfaction from Ethiopia. So, yeah, I say disagreements involve the speed of filling the reservoir and downstream effect in Sudan and Egypt, as well as security concerns for Egypt if much of their freshwater supply is under the control of a country that is less than best friends. So they have this kind of civil war, rogue state. Maybe Egypt could see Ethiopia as, people could see Egypt the same way, but they see that their water supply is maybe being held ransom by the Tigray over there in Ethiopia. That's not a good way to have security for your country. There's possibility that there is military conflict even between states, not just a civil war, but there's all sorts of other stuff. So anyway, bringing this back to Bitcoin, like, it's not an apples to apples comparison comparing Texas to Ethiopia. It just isn't. There's a huge tail risk involved. Almost anywhere you go, there's going to be a huge tail risk involved with Bitcoin mining. Some of the places that wouldn't be would be maybe Scandinavian countries, the United States, Canada. There might not be as much tail risk, but there's going to be a lot of this stuff, especially in places like Africa, where the governments are much less stable. There's more tribal tensions. There's more risk of civil war, seizing of your property, et cetera, right? Okay, so that's what I have to say about that one. Hash rate and difficulty. Mempool.space charts are back up this week, and this I really like these. These are pretty, but the pink is the difficulty, and that's on the right-hand axis. Left-hand axis is hash rate. They have, it's like, I think it's the daily hash rate, the really busy one or the noisy one. And then the line is the moving average. And I'm not sure what the moving average is. Maybe it's the 7-day moving average, but it doesn't say on the legend there. So as you can see over here on the right, after this big difficulty adjustment up, hash rate kind of went down, started trending down. And then just very recently, it started going back up again, hitting near these all-time highs in hash rate. So that's kind of what has been going on. 3 days, the difficulty adjustment is supposed to be roughly negative 3.2%. Okay, mempool. The mempool dipped into the next lower fee band this week, meaning fees are coming down gently and manageably. You see it touched the blue way over here, kind of touched this blue slice. It's back into the green now, but slowly but surely the network is chewing through this. And this is also with lower hash rate this last week. So blocks were a little bit slower, right? A little bit slower than 10 minutes instead of a little bit faster than 10 minutes. And that can make a difference. I mean, if you're going to get maybe 2-3 more blocks a day, that's a ton of transactions that you can get through. And so this is chewing through those despite that. Okay. Next up is inscriptions. This is the most recent addition to the newsletter. And the number of daily inscriptions continues to fall. Last week caused the monthly moving average in this chart to drop significantly. I think I left this completely the same because the verbiage made sense for both weeks. But let's see about this. You can see this dark brown is a moving average, 30-day moving average. Continues to fall here. We'll see what happens if, this is a much more managed decline than over here where it just dropped precipitously right here. I think that's when the ordinals protocol broke, right? But here we just have a slow decline, kind of an apathy type decline. Okay. Fees paid by inscriptions remains low, roughly 5 million per week, less than 5 million per week here. Looks like to be about 2.5 million, actually. 2.5 million per week. There's no real market for these things. So that is it. Let me check the comments now. So let me go over here. Check the chat. Groman getting wrecked. Dex Invictus back with us. All-time high before having. It is possible, man. It is so possible. I was listening to Tone Vase today. I haven't listened to him in a long while, but I saw he was going live earlier. So I listened to some of his stuff, and he said that he thought that there's a chance he can go to all-time highs by the halving. On my Protons, my premium newsletter, I have had a percentile, my odds for that happening. There's some people on Telegram that were talking about even 150,000 by halving, or maybe it was by 2024, like the end of 2024. That's possible. But by halving, I would say all-time high is looking more likely. I don't think it is the default case yet, but we'll see how fast we make it past 57,000. If we can blow right through 57,000, yeah, we got, 50 days left till the halving? Almost 2 months. Hell yeah, we can definitely make all-time high by that point. It's only going to be another, 15%. Let me go to the live chart and see. Share this tab. So let me clean some of this up. Now, remember the other things I've been talking about. We have this possible banking crisis. That's what this vertical line is. This would match last year's March banking crisis. And we have the bank term funding program that is ending on March 11th. So we'll see if there's anything coming from that, and also the halving. So there is some narrative fuel as well, not just fundamental fuel from the ETFs buying up Bitcoin, MicroStrategy buying up Bitcoin, Tether buying up Bitcoin, everybody buying up Bitcoin. But also from a narrative perspective, that's very important. But okay, what was I going to measure? Oh, okay, from here up to all-time high, I mean, it's about 27% from here. And then if we measure from roughly, what I say, 57, once we break 57, up to an all-time high would be only 18% move. So yeah, that's totally doable. I can see that happening very soon. Maybe not by halving, like I said, but there is a possibility, slight possibility we can get up to 100K. But actually, no, I take that back. I think my base case is to get to all-time high by halving. Now I'm going to have to think back what I wrote. Should I just go check it? So let's just go check this. Bitcoin forecast. Okay. So this is from last week. Okay. I was feeling bullish last week. I do not see how price cannot be at an all-time high by halving. 56 days left, 30% away. It has to move fast, but it's very possible. We will never go under 40K again, making that official call. Okay, so I did say that. All right. There you go. So base case is all-time high by halving. Maybe that 51% chance, but that will be very unusual. Obviously, it's never happened before in Bitcoin history. So at least take that into consideration. That has never happened before. All right. Let me see what else we got here. Great streaming. So thanks, Dex. Holding down the fort. Yeah, let me go check Telegram. We had quite a few people live in here. At the peak, I think it was about 20, which is one of the better days. So let me go check Telegram here. Waving. Yes. Facey McFace back with us. All right. Well, guys, if there's no more questions, I am just going to end the live stream here. So thanks for hanging out. Didn't have any glitches today, as far as I know, with the sound and all that. But yeah, hope you have a good rest of your week. And I'll see you guys on the next